Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. Today's program is designed to help coordinate all your financial, tax, legal, and insurance to try to help you save time, money, and worry. We have special guest Mark Sipos with us today, internal director of our accounting firm. So thanks for coming on the show today.
Thanks for having me, Jim.
You know, in the past, we've talked about donor-advised funds, we've talked about foundations, but there's also a way to help a charity and also get some income for yourself in retirement, isn't there?
Correct. One of those tools is a charitable annuity. And basically, it's a contract between a donor and a charitable organization. So the donor will gift appreciated assets or cash or other types of assets to a charity, and in return, they get a lifetime income stream.
So whether you're single or whether you're married, you're going to make a lump sum deposit and you're going to give it to the charity. They're going to invest it however they want, but they're going to give you an income stream for that. And when either you or you and your spouse pass away, then the charity actually gets the remaining proceeds.
That's correct. So you get an income stream for life. Part of that income stream could be non-taxable to you. And also you get a partial tax deduction on that initial tax return. For example, a 70-year-old individual that gifts $100,000 to that charity will then get a tax deduction of $38,259, and they'll receive $5,600 in annual payments. About $3,900 of that will be tax-free for about 16 years, and then they'll have to pay tax on the full $5,600.
And when people make these donations, they could do cash or property, but one nice thing is might be able to utilize highly appreciated assets like stocks, because then they don't have to pay any capital gains tax on that.
That's correct, but there are some disadvantages. For example, the rates you do get on your investment depend on the charity, your age, and also how much you donate.
Now with these donations, and when you get that income stream, it's an irrevocable gift, correct?
That's
And then
correct.
Also those income streams are kind of permanent too.
That's correct. So they're fixed income streams. They don't adjust for inflation, and you cannot get the money back from the annuity.
And also, unlike other gifts, you know, when you make this gift to the charity, you're only really benefiting one charity.
Right.
Unlike a donor-advised fund or other things where you might be able to help multiple charities. So you've got to keep that in mind as well.
Correct. And there's tools for older people that help them, you know, leave a legacy that they want. But for younger individuals, this might not be a good tool as the interest rates are pretty low.
So between either donor-advised funds, foundation, or possibly these charitable annuities, there might be something out there that can help people to not only help their charity, but also help themselves and maybe save some taxes at the same time.
That's correct.
Well, I'm sure this information was really helpful for our viewers, so thanks for coming on the show today. Stay tuned for the Chris Wallace Show, coming up next.